Yeah, I'm losing my edge.
Pete, today we're talking about dollars. We're here to talk about how to buy them, probably flip that around, show you how to sell them, and in a couple new and interesting ways, both in terms of products and in terms of strategies. Something that goes along with the small dollar product is both the ease with which you can buy or sell dollars, which seems like it should be a really simple thing, given that if you live in the United States, you usually use dollars for a lot of stuff. So accessing that market in a tradable product should be relatively easy. It isn't, unfortunately, until it wasn't until the small exchange came along with the small dollar product. But Pete, not only looking at that dollar product, but looking at putting some interesting stuff on top of it. We started this conversation last week. I wanted to pick it up, especially today when you've got the major currencies that we look at against this dollar, Pete, are usually euro, sterling, or pounds.
Right.
Yen. I'm giving you both of them because in the last segment, Pete was trading pounds against sterling, which is an impossible trade.
Oh, look how clever you are, not letting go.
But yeah, euros, pounds / sterling, yen, Canadian, and then Australian dollars are the big ones that we kind of look at. And those are all baked into this dollar product. It's US dollars against a basket of those five, plus Mexican peso and Chinese renminbi. But what's interesting is, especially like today, you're seeing the US dollar is lower, and you're seeing currencies across the board are mostly higher, but sterling is up big. Euros are pretty much unchanged. Yen is down pretty significantly, and Australian dollar and Canadian dollar are kind of just like toying with back and forth, being up a little bit on the day. And so I want to show there's pretty much one easy way to buy the US dollar, and this is a dollar product that Pete has recently been very correct on trading. It's down 11 of the last 15 days. Pete's had a nice short dollar bias for the last few months here that's been performing pretty well, but now kind of getting close to the lows for the last 6 or 7 months of trading for anyone who did want to be on the long side of dollars. And a long dollar trade is a good way to diversify a portfolio of stocks. It's a good way to trade just broad speculation on how, okay, I think the US dollar is going to outperform other currencies abroad. It's a very easy, simple, and small way to get that done. But we're also going to go a little bit deeper on getting that done in a more strategic, advanced way. But to start here, Pete, you're not necessarily interested in the long dollar trade quite yet, are you?
No, I'm not. I think this is something, especially with this product, it's nice because it lets me play out now. I mean, part of the mental gymnastics I go back through, and we always wrestle about putting too much of a clever idea that just overwhelms everyone. And I don't mean that in terms of, we get some of the smartest viewers in the world, but it's a lot to take in when you're doing other things or you haven't, been trading FX for 30 years. So, part of I fumbled around with euros and sterling today, didn't do a great job on either one. But I like the idea of I think one of the things we tried to do at the small exchange is build simple things that if you want to, you can leave them alone. And that's kind of what I want to do with this particular trade.
And that's a great place to start here with that conversation. Pete's talking about, okay, he bought euros today, which that if you're trading 6E or M6E, that's euros against the US dollar. And then he sold sterling or pounds, if you're trading 6B or M6B, that's pounds against the US dollar. And so that is a little bit more of advanced of a trade. It takes the dollar out of it and you're trading euro against sterling. But what's interesting, before you get to that level, like the first floor here of the video game, before you get to the boss and you're trading, 5 different currency exchange rates against each other, is both euros and sterling are green today, and this dollar product is red. And so that's kind of where you want to start here, is if you think this dollar is cheap, I would start there, see how that performs as a product that only moves about $70 on a daily basis. Right. So it's not going to really kill you depending on your account size to kind of get comfortable with the dollar product. But what's nice is whereas someone like Pete, who's been trading currencies for decades, he's going to get into those advanced trades. But this is the first time I'm getting into currencies. On a day like today, well, okay, abroad currencies are up, US dollars down. That's all you need to know, right?
Right. And that's what's great. And you can't trade either side of this. I'll tell you, right. And this is very true. We have the luxury of, I mean, we're doing a lot of things, but I mean, I've got my screens open, I'm trading. Um, and, those cross currency pairs are interesting trades for someone with the time to do them, but they really require, I don't feel I can just put those on and then check back in at 3 o'clock to see
Sure.
how they're hanging in there. This is a trade that affords you that ability. And that's one of the things we wanted to build is the ability to scale around an idea, and also the ability to feel that, like most of us, we've got 1 or 2 day jobs and we can't sit there looking at every tick between this back and forth. And I think that's a really important part of adding something that we've demonstrated over the last 4 weeks, has a tremendous amount of diversification to it, has some unique independent movement, and affords you that hedge against this dollar-centric portfolio we all live in. So
yeah, and I like that piece of like, how can I make this a trade I don't need to watch every second of every day, and I don't need to lose sleep over? And we're going to actually get to this is one of the scenarios where adding exposure is actually going to help you sleep better, as we'll see in a little bit. But so, if I'm long the US dollar, Pete, and then I've got these other tools here, and we've got micro versions of them that we'll get to in a second. But I've got 6J, which is the yen, 6E, which is the euro, 6A Aussie dollar, 6B pounds or sterling, 6C Canadian dollar. Got all those things in this format or a micro format to trade against that US dollar. The way that you're going to look at it is a long dollar trade coincides with the way to kind of reduce volatility is to buy one of these currencies. And why is that? Usually our pairs trade are buy sell. You think about buying a basket of stocks in the small stock 75 and selling another basket in the NASDAQ or S&P, and you're like, oh, that kind of makes sense. I bought stocks and now I sold stocks against it, and I want the difference to play out. This is that same thing, but you're actually doing a buy or sell trade, because SFX, this trade right here, is the US dollar against all of those currencies that we're about to look at again. And these are these currencies against that US dollar. So if I buy this dollar product / SFX, I'm in theory short all of these other things. Now, say I want to kind of pair this with the underperformer in this bunch. Say, okay, Canadian dollar over the last decade is the weakest. It's down almost 25%. I want my long dollar bias, but I also don't want to be short the weakest thing here. I think that Canadian dollar could bounce a little bit. I would buy that SFX, and then I would buy, as we're going to see, a micro Canadian dollar contract on a 1-to-1 basis. And what's really nice, before getting into those ratios, Pete, and a little bit more math behind this stuff, is look at this chart. Take we don't usually like to go back a full decade when we're researching a trade idea. It's a little too long term. But what I love about this chart, Pete, is you've got different performance. At any point in this, you've got some of these currencies that are outperforming, and in a different window, they're the underperformer. To start here, you've got this euro contract in yellow that's underperforming for the first 3 or 4 years. And then you see here a lot of turmoil hitting in 14 and 15. And you see these outperformers in Aussie dollar and even Canadian dollar here in blue, trading with that euro and sterling. You got sterling actually being the outperformer here until midway through 2016 and the Brexit vote. And then it comes all the way down to being the underperformer in that same year that it was the outperformer of this bunch. This is all just to say that these things change constantly. You can have your long or short US dollar bias, and then go in there and be like, all right, what's the weakest currency? What's the strongest currency? Let me get a little bit of that exposure in there as well, because these are constantly changing in here. So you start with that dollar long or short, and then you look to, okay, which of these is the weakest? For instance, this year, the euro has kind of been the outperformer. So maybe you want to stay away from that long and buy something like British pound that's underperformed in the last couple of years. It's
Right.
that part's really up to you, but having the versatility to have your long or short dollar exposure and then play all of these things kind of off of that dollar exposure in the interim is actually really cool. And you can see these colors constantly changing, Pete.
Right. And it is. And I think this is great context between 2010 and now of the nature of the group of FX to kind of outperform and underperform. And there's no guarantee that, we're going to, I mean, that movement took 10 years to occur and we spent a lot of time around the zero bound. But the idea that I want this simple expression of long or short dollars. Now, what's my next step? It's not getting complicated with a lot of different ratios and different tick sizes and everything. Let's move to, and that's one of the things that's nice about Canada. It's a good one here because of the extreme. It's also probably by far the easiest one to sterilize or remove out and keep that bias. I'm looking for the bounce. I don't want the extreme we always talk about things that we put on that there's nothing worse than your idea being right, but the way you constructed it didn't quite work out.
Sure.
And here's a case where it's a simple thing to take that dramatic outperformer. And these are guys, huge moves in the currency world. Huge.
Yeah. I mean, you see this, like this is a great example to me where yen in green goes from the outperformer up almost 20% here from 2010 to 2012. By 2014, it's the underperformer, down 10%, extends on that underperformance. And now, Pete, now that we're in 2020, yen is the outperformer. These are big moves in these currencies. And what's nice is that you talk about, these ratios and making it more complicated. We constructed this small dollar contract, Pete, to be about the size of these microcurrencies. So you can, and this is something that I will give you all credit for, Pete, because this is definitely, this idea is a brainchild of yours where it's like, okay, if we construct, whether it's an equity index or a currency index or any of these, the precious metals index, it's nice to have a core thing to either invest in or speculate on, and then have these other pieces that can, you always refer to it as like, take out that exposure. And what's really nice is, say I'm long SFX and I'm short each of these things, euro, pound, Aussie, Canada, and yen. So I'm short all these things. All I have to do is buy a single one of these micros, and that short exposure in, say, sterling here is gone. And that's a really nice, easy piece relative to these microcurrencies. And it's why we constructed this small dollar contract the way that we did. It's a simple buy or sell 1-to-1 ratio with that micro pairing. And here is, with that similar notional, which arrives at that 1-to-1 ratio there, is because you got average days here in each of these currencies, Pete, around $70, give or take some dollars. These are all very similarly sized products here, which is nice.
Yeah. Hey, you know what? This is the next iteration. If you want to manage around, this simplifies the idea because and granted, I just for full awareness, I did just cover my NASDAQ shorts and I'm officially done for the day in the world of NASDAQ trading. I've contributed.
But there's plenty to do NASDAQ in this currency world, though.
And that's what's really fascinating here, I think, is that you can build this idea out and maintain this bias. And then when you look, and I was just citing that because that extreme is so glaring. The extreme in silver, so glaring. It's big. How do I take advantage of that? Or how do I work a core position and then determine what's an extreme that I may want to simply take out and then put back in? It is
totally.
It's a simplified hedge. We talk about hedging and we try to make that concept easier. And, there's a lot of subjectivity to a hedge. How much do I want to hedge? What do I want to use and in what proportion and what product? Here is a simple way to take out either for opportunity or for hedge this core product that I think, this is one of those that is part of your daily checklist and part of the mix of products.
And yeah, getting to that hedge piece a little bit, you look at that $70 a day in SFX, which is, a nice little sweet spot for a market that you might want to just try on its own, which, like we said, is kind of level one here. When you add any of these to that trade, whether it's a long, long or short, short trade, you're seeing that $70 in the yen not taking down too much because that yen can really move back and forth. But you see this being clipped by 20, 30, 40% in some scenarios, depending on the product that you use. And that's that hedge. Adding exposure here in one of the currencies actually reduces the size of your trade
Right.
in daily movement. And I want to run through these charts real quick because here is the notional movement of the SFX contract. Right now it's priced at about $153, $154, which times 100 is going to get you to that notional of about $15,000. And if you just look here, get kind of like a full summary of this thing, you see a high to low move of a little over $1,000 here in 2020, and a lot of movement back and forth on like a monthly basis of a couple of $100, which is, it's a nice little mid-size, or actually, no, just call it what it is, a small product that allows you to trade US dollar without really breaking the bank. What's interesting here, Pete, is you add another product that's close to, let's just round them both to about $15,000 products. You add that other product and you get bigger numbers here on the y-axis, but smaller fluctuations. The high to low here in this this is an SFX contract plus a M6E, the micro euro contract. This thing is, like I said, a higher price point here because it's long two different or short two different contracts here, both at about 15 grand. But the high to low, Pete, less than $1,000.
Right.
The intraday movement, like we said, goes from $70 down to about $41. And what's really interesting to cap all this off is if you added M6B, Pete, very different trade. So you've got this smaller thing. You start with that idea of long or short dollars, right? And this is the way that dollar has performed this year, kind of unchanged. If you had bought euros with it at the start of the year, you're up a good amount so far. If you had bought sterling with it at the start of the year, you're down. And this is really what's cool is you drop that size down. You drop that y-axis here, which was
appreciably
$1,000, but when you do the sterling piece, it's about a $500 range this year. In euros, it's about $700 or $800, and just very different trades as well. And same if you wanted to get short, this might be euros. I know you've liked longing euros this year. Euros the outperformer. This is one that if you wanted to sell dollars, selling euros would be the stronger one here in 2020. If you wanted to buy dollars, buying that sterling piece, which until today, unfortunately, was really the weakest piece.
Right.
It's a nice mix of smaller, inventive, and different variable trades across each of these different markets. It's just a matter of you've got your bias in dollars working in the background, and then, here, the yellow one, euros, that's the weakest one. I'm going to buy that against it, and you see it start to outperform. Down here, it's sterling, and sterling bounces back. It's really cool to get even just one level more inventive with these currency trades, Pete.
Absolutely. And Frankie, you mentioned something. You talked about just putting on the core SFX is a level one trade. You know what? It's a simple trade. This complexity is not a contest. You know what?
Yeah.
And I think sometimes we all feel it is. Well, I'm not doing everything I can because look at him. He's trading knob spreads or whatever you want to pick out from it. Trading is not a contest. The only contest is with yourself, and your only way to judge yourself is through your P&L. So don't feel that these are incredibly interesting trade opportunities that are to the next level, but you stay at the level that's comfortable for you. And it is not a race of how quickly I can get from level 1 to level 3. Use your P&L to judge where you are, and then the next opportunity you want to put on. And you know what? That is, we all as traders have a race within ourselves. There's no race to go, and adopt more product until you're in that comfortable zone.
I'm imagining traders who we both know, I won't name any names, but people who constantly will call you or me or someone else and be like, why am I short Australian dollar again? And it's because they've got a portfolio of, long US dollar, short Australian dollar, long Canadian dollar.
Right.
And you're totally right. It's not a contest of, okay, well, right now, Canada and sterling are the pieces that have been sold off the most, and yen and euro, they're the most expensive pieces. So I want to buy dollars, I want to buy Canada and sterling, and I want to sell euros and yen. And it's like, no, you don't need to be, putting that much stuff together. Level one, you get long or short this dollar market. Level two, you maybe add a little extra flavor to it. There's a ton of different ways to buy dollars, Pete, but they don't need to be necessarily the most complicated, and they're not with the small dollar contract.